All right, welcome out to today's advisory report. It is July 28th, 2026. Let's go ahead and look at the market regime. No change from yesterday to today. Adverse market conditions. The short-term trend is bearish. The intermediate trend, however, is still bullish for the fourth day in a row. The market had a tough time getting over the 50-day. In fact, not even close to challenging it if you compare it to what the challenge was yesterday. However, still staying above the lows of the 3 to 4 day range that we have, which is good news. But it also looks like the market might be setting up a little bit of a bear flag. We're going to have some volatility tomorrow, most likely, with a Fed rate announcement and after announcement meeting. So buckle up. We are playing a bit of defense, a lot of defense right now in the ultra aggressive account, as that one's been kind of hit the hardest here recently. Let's go ahead and look at that. 68% offense for the ultra aggressive, 32% defense. We are still playing defense in the aggressive, just not as much. The moderate aggressive, yes. Defense, not as much. The moderate staying kind of with it, as that one is already decently defensive to begin with. Let's go ahead and jump on over to the intermediate trend. As we can see, the intermediate trend is bullish. The price is above the 30-week moving average. We continue to move sideways. Last 3 or 4 days, really just hugging these intra-market lows that we've been developing. The moving averages continue to catch up. Taking a step back and looking at this, nothing looks bad at all. Everything looks normal. One of the things is this price is just so far above the 30-week. You can kind of visually see that it doesn't get much above the 30-week than what it was. So the expectation of some consolidation, some short-term maybe volatility should have been in the cards. Let's go ahead and look at the short term. Really what is giving us the most problem right now, living below this 50-day moving average. As you can see, if I continue to zoom in here, 50-day moving average really was a support area in multiple spots, but once we've dipped below now for the last 4 days, it's serving as a bit of resistance. We have the 20-day short-term moving average rolling over, not a good sign. The 50-day may even be rolling over also now. It's going to be time for this to make up its mind here fairly soon, but price is still holding above this bottom triangle line. And like I said, it's starting to look like a bit like a bear flag. If we just kind of drew a pole here and a flag here, I know it's tough to visualize. Technical analysis, this would be a bearish pattern. A break below would say that this pattern is probably going to continue lower. A break above this area, and that is nullified, and we go back to bullish short term. So a lot of things lining up right now. If you think about the moving average as resistance, this as support, break below is bad, break above would be good. And so we'll see how this wants to pan out. Let's jump on over to Market Lens. Played a little bit more defense in the ultra aggressive account. We had to blow out Goldman Sachs. It just broke through our stop, even though it recovered a little bit, just still way too low for us to hold on to this, breaking that 50-day moving average. We also got rid of XBI as that was turning pretty weak. Same kind of thing you'll notice. If we drew a line right here, broke below, it did recover a bit, but it just looks like a downtrend. No need to hold this with so much uncertainty going on. However, Eli Lilly turning up, continuing up, confirming higher. That's exactly what we want to see. We want to be in stocks that are doing that. CrowdStrike played with us a little bit today. Let's look at the chart. As you can see, it did break below, but recovered more nicely, if that's even English, than some of the other ones that we looked at. So we're still holding on to this one. This could be actually a bottoming signal as it regained the 50-day. We'll see if it wants to turn back up. And so that's out of the individual stocks that we have inside the ultra aggressive. Like we just looked at, we have a lot of cash on hand. Things turn back up, we'll look to redeploy that. That's what I got for you today. Take care. Oh, wait, one more thing. Let's go ahead and look at the QQQ before I forget. This is really the problem child in the market. The NASDAQ 100 breaking below this 100-day moving average doesn't look good. Down almost 1%. So you start comparing that to the SP 500. Let's see if we can bring up the SPY really quick. Just imprint that in your mind. Now look at this one, right? A lot different. All the way down here is the 100-day moving average. This is holding up. So if that's the bottom for the Qs and things turn back up, this one will turn back up too, most likely. We'll just have to kind of cross our fingers. We're wait and hold. We're positioned the right way in our portfolios for whatever ends up happening. Looking forward to seeing how tomorrow pans out. Take care. Have a wonderful, wonderful evening. We'll be right back at it tomorrow.